What is going on, everyone? This is Andrew O'Connell with Pristine Capital coming at you with yet another market recap video. It is March 9th, 2021. Please like this video and subscribe to my channel if you enjoy this content, and I will continue to make it for you. Today we're going to talk about the crazy price action, the indices. We'll go under the hood and check out the sectors and style factors, talk about some of my trades for the day, and we'll wrap up with some options order flow. But before we jump in, a quick risk disclaimer as always. Nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan, your own risk parameters, and last but certainly not least, do not YOLO your entire account into any one of my trades. All right, so I actually just got back from a haircut. I actually ran home from the haircut, so I am like super out of breath. We're going to make this a quick recap video if possible. Usually I end up just blabbering on for a while. But for our box scores, we had the S&P 500 up 1.43%. We had the NASDAQ QQQ, huge bounce, up 3.94%. We had the IWM small caps up 2.1%. And we had the Dow Jones back in its rightful place, lagging the rest of the market, up 0.11%. So if we take a look at this price action, another really nuanced day where, coming into today's session, what I was thinking about is like, okay, this price action still fits neatly within the context of this downward trend channel. So coming into today's session, we opened up all the way down here. I was like, you know what? I just want to be conservative. If I can sell something, I'll sell something, and we'll see what the river brings. Let me rewind even further beyond that. I completely forgot. So last night, the price action looked pretty bearish, as it has been for the past month, really. The Chinese stock index, the CSI 300, looked like it was going to plummet and completely go into the tank. And the Chinese government last night said they were buying stocks. That ended up being the huge game changer reversal that we needed. And what's funny is, Alex Good on Twitter had a really good post about this last night. And it really got me thinking. So I'll just pull it up here. He said buying NQ futures, shorting AUD JPY. The 4.5% rip off the lows in 10 cent due to state intervention is going to drive a positive feedback loop on ARK with the new PBOC put blowing up shorts. Reflation trades likely off sides. And Alex ended up being pretty spot on with this. And so I responded to him. He really got me thinking. I was like, savage. Good chance Tesla destroys some unsuspecting shorts tomorrow. Should make for an interesting day. So in this market, really for the past month, it's been expect the unexpected. You're in these high growth names. They start blowing up. You're rotating into value. There's just a lot that's going on. And the market's not really trending. Even these style factors, a lot of times they'll trend for quite some time. Now it's just this really, crazy price action. So coming into today's session, I was prepared just for that. Maybe there's a short squeeze. We'll see. But the S&P 500, you can see, rallied all the way up to the point of control here. Came off and closed super ambiguous right around this downward trend channel, right below this 20-day simple moving average. But I must say, this seems like pretty constructive price action. You can see here we have a higher low, higher low, higher low. So, that in and of itself is a good thing in my opinion. If we look at this hourly chart, you can see here we have this downtrend that we were in for quite some time. Now you can see it's like we're starting another little mini uptrend. So you can see, we made a high here. Then we made a higher low, higher high, higher low, and then another higher high. And you can see this is pretty neat price action here where we pulled up almost this weekly value area high, fell back over into the close, retested this downward trend line, and if we got a bounce here, we could really be off to the races. We'll have to see. So I would definitely say this price action looking a lot better than what we saw, in days prior. If we look at the Qs as well, Qs, still looks pretty messed up here. But, really strong day. We actually closed above that 5-day EMA. So on a rate of change basis, this is looking a little bit better. And then when we look at the small caps look awesome. I still have my April calls on. in the small caps. You can see the small caps are within this monthly value area. They closed above the 20-day. So what's really tough is that when the market is in an uptrend and it starts flipping down, we have to be very careful to not be like, oh, well, it's in an uptrend, like I'm going to continue to buy the dip. That's one of the things that I did coming into this downtrend sequence. And I know a lot of other people did the same. Like, you're sort of resistant to that trend change, and, you know, it shows up in your results. So as this trend starts to become more positive, I want to make sure I don't also resist that. I want to make sure that if it's getting more positive, you know, I'm trading, you know, that way as well. I really just want to be disciplined. So here, yeah, like low key, it looks a lot better. You know, a close above the 20-day is a good thing overall. With the RSP, you know, I was talking about this a little bit earlier on Twitter, but yeah, the RSP, you know, closed off the highs here. But yeah, it's making new highs. So that's not really something that you would see in like a bear market, the equal weight S&P 500, you know, ripping to new highs here. Let's take a quick look under the hood. When we look at our FinViz heat map, you can see pretty much all of the areas of the market that have been really pummeled. The areas that have just gone no bid. It was kind of like crazy the past couple of weeks where these stocks that were so beloved, you know, all of a sudden it's like there's no bid for them at all. So we had Apple up big, up 4%, Microsoft up almost 3%, we had Amazon up 3.76%, and we had Tesla up almost 20%. Then you can see we were getting some give back in some of the areas everybody's been rotating into. So like energy gave some back. I'm long some USO puts. And industrials gave some back right over here. Banks gave a little bit back. So yeah, that's the interesting thing, the challenging thing about markets. Where the past couple of weeks, everyone, including myself, you know, has been like, oh my gosh, value trade, value over growth, value, value, value. And then suddenly today, things can switch very abruptly. If we jump into our sectors and style factors, you can see these are all ranked in terms of momentum. So I think what's interesting is like some of these areas that went no bid really came alive. We had solar energy up almost 13%. We had the ARK Innovation ETF up 10%. You know, all these ARK funds did really well. You can see the KWEB Chinese Internet ETF up 8.53%. But what's interesting, though, is that all of these funds, they're still at the bottom of the list. So I think that's pretty important, where this in the grand scheme is really just an awesome bounce. But the energy ETF here, XRT, retail, regional banks, those as of right now are still leading the pack in terms of momentum. One thing, and this is pretty nuanced, but I notice it does happen quite frequently. Because, you know, I'm a proprietary options trader. I get judged on my performance every single month. You know, I'm doing the investing championship as well, so I'm putting my performance out there each and every month. I did plus 23.6% in January, and I was plus 1.8% in February. We'll have to see where I come in for March. But yeah, so I'm always cognizant of like, where are we in the month? What's happening in the month? And one thing I noticed is like we have options expiration coming up, not this Friday, but the following Friday. A lot of times when we get these rotations, what'll happen is we enter the expiration month, everyone's in growth stocks, and then it'll be like, oh my gosh, we're rotating to value. The growth stocks get crushed, and the value stocks are really surging. So it's like everyone was positioned in growth calls, nobody was positioned in value calls. So suddenly it's like, the vast majority of players are off sides. Then as the month goes on, it's like, okay, now everyone's cut off their growth exposure and now they got into value type call options. And then a lot of times what you see in the back nine of the options expiration month is you get this like rotation back, like a give back. So essentially what ends up happening is the latecomers to the value rotation a lot of times get, you know, screwed. And, you know, the people that were stubborn in the beginning, you know, the growth rotation, you know, they also get kind of screwed up. So it's almost like, yeah, it's rewarding the players that are really at the top of their game and spotting these rotations quickly. And then for the Johnny-come-latelys, you know, there's not really much for them. So like if you were entering a lot of these value stocks super late, you know, today you might be like, oh my gosh, I just closed out my growth and now here we are. So really interesting. This market that we're in right now, I will say, is a lot more challenging than what we had, at the end of 2020 where everything was going up. Then for our style factors here, you can see similar dynamic. This momentum style factor ETF up 5%, but in the grand scheme, when you look at the context of the month, it's still down big. High beta down almost 1%, but in the grand scheme of the month is still up, very big. So yeah, just a little bit of give back on this rotation trade. In terms of what I did today, some of my trades here, and these trades, they're all available for Pristine Capital members. You can see here, so I got long. I traded some common stock today. I got long XPEL, at around 953. This was a name from our weekly watch list. I send this out to all members every week. This is just me doing a lot of homework, analyzing the trends. I love putting together the watch list. That's the best thing for me. I love doing all this stuff. There's nothing I'd rather do than analyze the markets. So it's pretty cool, to just do it full time. But yeah, XPEL was on the watch list. I entered this one around $51 and change. And this one had some really nice follow through. Closed above the key moving averages here. And it made a shot at that point of control before coming off a little bit. But that's okay. Typically, you don't really get like, oh my gosh, we moved completely through the value area in a single day. Usually it takes, a couple days. It can take actually much longer than that as well. There's nothing wrong with that. A really nice day, finished up 9.3%. I took a target in this name. So I took a target at 53.50. Small target. I still have 80% of my position on the books. I closed out my BLOK. This is the blockchain ETF. I had some common shares I purchased at 52. Closed those out for 53.34. BLOK. This one looks like it's in a really nice pattern here. Closed very nicely. I noticed there was a headline about like Congress regulating these blockchain companies. And so I was like, you know what? I'm going to take my target here and move on. So yeah, this one looking really good. I also have some Bitcoin that I purchased at around 45,000. I added to that position. So I was like, you know what? I'll scale out of this blockchain ETF. This one, a really nice trade. Then what else did I do? Then I took off OMI for a small loser. So you can see here, I put this one on for 33.97. Close this one out for a 33.74. So this one, I kept it nice and tight, which is good. Tight losers is not a bad thing at all. So let's see. That's something not many people, on Twitter will really tell you about. Because like with trading, it's all about having a win rate. Everybody's got a win rate. Whether you're a basketball player, baseball player, any, tennis player, which is what I played in college. It's all a percentage game. So like with trading, same exact thing. Every trader has a win rate. It's all about what is your win rate? Is it higher than 50% or lower than 50%? And then on average on your winning trades, how much of a return are you getting versus on your losers? How much are you losing? So with OMI, this one looked pretty promising. Had a really nice earnings report, pulled back to the 20-day, looked really strong. What I notice is that every time it gets up to these levels, there's definitely an active seller here that is offloading shares into this around like 34, 35 level. So really just for prudence, I was like, okay, I'll take a position off. So I closed this one out. Then I did some options trading as well. This one here. So I entered some Q's puts, right off the open, just in case we fell over. Ended up scalping those for a quick 4-cent winner here. So really just a scratch. But I said tech seems well bid here. Did not fall apart in the first 15 minutes. I saw that bid and I was like, I'm not going to mess with this. This looks pretty strong actually. So if you look at the Qs, pulling up my hourly chart. So I entered short, right here when we were kind of flirting with this point of control. And I entered the puts when we tagged it. Then we came off a little bit. But I noticed right around here, things were still very well bid. So I was like, okay, I'll take this one off for a little scratch. And we'll see what happens throughout the day. And then sure enough, we did get some really nice follow through. So earlier I talked about how, I was thinking Tesla could end up really short squeezing. That thought was in my head from that conversation I had on Twitter the other night. So I took a 620 by 630 call spread in Tesla that expires this Friday. I took it for $4.49 to make a potential $5.51. And this one, so I said position size for max loss, playing for a short squeeze. And short squeeze is what we got, team. So if you look at Tesla, finished up 19.64%. This thing, when I entered, I entered when it was probably like 617 or something like that. And I was like, okay, we'll see what happens. I think this could really squeeze. And Tesla just went on a rampage here. So you can see looking really strong. So we'll see what happens with this position. This one looks, fingers crossed, like it could end up being an over 100% winner. So that worked out. Yeah, I took a Disney diagonal call spread. If you were watching my video yesterday, I took off my Disney calls that I had for about like an 80 or 90% winner. So I added that position back on. I did a diagonal though, just in case it takes some time to get to my target. Disney was a name, and this is kind of interesting. So like talking about rotations, Disney was a name. I saw so many people like ranting and raving about it yesterday, when yesterday was really the top. And that's when I exited my position. But yeah, Disney sort of went no bid today, where you can see it pulled into this monthly value area. So we'll have to see if it holds this level. I'm really interested in keeping that diagonal on. If it just fades, into the abyss, I'll take that diagonal off. But yeah, I wanted to buy the dip in that one because I want to stick with that trade. EWU, this one is the United Kingdom ETF. I got long some calls for October. So yeah, October 21, 31 strike calls. I saw a large options order come in for this, and I like the pattern here. And, I keep track of country ETFs and their momentum. And I noticed this United Kingdom ETF, it's gaining momentum here. And if you see, it's sort of forming like an ascending triangle. It's making higher highs and also higher lows. You can see it's above all those key moving averages, trading above value. Then I saw that big call buyer come in. So I was like, you know what? I'll take this trade. I'll take this one for a spin. And what else I did? I did some other just like chopping around trades. So Starbucks, I entered a calendar spread. I got long the June 18th 110 strike call. And then I shorted the March 19th 110 strike call. And what I noticed with Starbucks, though, was I was playing Starbucks for a breakout. And you can see here it faded into the close. It didn't hold the breakout. So I exited this position. And I'm really proud of myself for doing that. That's really like, honestly, the hallmark of a good trader. In 2020, it was like we were all just rewarded for, being bad traders, essentially. But what you want to do is if you have a signal, hey, this is a breakout. I'm entering this trade because it's breaking out. If the stock stops breaking out or that signal's invalidated, you have to exit. So that's what I did. So luckily, that's what I like about these calendars. The diagonals are a little bit more forgiving. So I was able to get out. Where did I get out here? Yeah, so I exited for $4.02. I had paid $4.32 to enter this one. So just like a little paper cut loss there. Because another thing, like learning lesson for me with this recent downdraft in the market, trading is not just about the positions that you have on the books, like the good trades you're in, the winners you're riding. A lot of what it is also is, the bad trades that you have on. Those bad trades will really hurt you. They'll cancel out your winners. They will drag your P&L down. So you want to make sure you're keeping your best trades on the books, and the trades that don't look as promising, you want to just get rid of them. So Starbucks, it looks like there's other opportunities out there that are a little bit better at the moment, so I just closed that one out. Peloton, this was a pretty cool trade. I like this structure. So I entered an iron butterfly on this one. So I shorted the 115 strike, the call and the put. Then I got long the 109 strike put and the 121 strike call. I took in a credit $4.12, and I have risk of $1.88 for this trade. So that's why I like these iron butterflies, because you can enter structures where it's like, even if I take a max loss, it's only $1.88. It's really not that bad. So with this one, I'm really playing it for a non-movement. And I figured I already have my Tesla on the books as a long position. So this one I'll play to the neutral side, just in case these names lose a little steam or just kind of stall out for the next couple days. So let's see Peloton. Yeah, so Peloton had a really nice day also at 14.47%. But this is still, in the grand scheme, it's in a downtrend. So we'll have to see. Maybe Peloton does just rip faces in these next couple days, similar to Tesla. Tesla and Peloton actually do look pretty similar here. So if you look, the Tesla chart. Tesla's definitely, a little bit more high beta. It's been a little bit more powerful. But Peloton is right there. So essentially what I'm doing is playing this one, essentially saying in the next couple days, it won't make a huge move to the upside or the downside. So we'll see what happens. This one, to be honest, I feel more threatened to the upside than I do the downside. This put in a nice little bottom here. We'll have to see if it really rips. And then what else did I do? Yeah, and then into the close, we started to come off a little bit. And really for prudence, I was like, I'm going to enter a Q's hedge. So I entered some 311 strike puts. I actually put this one on like right after the bell for $15.64. And what I noticed is like this market is good for trading both sides, because at any given point there's such big intraday ranges that you could be long puts, and at a certain point in the day it's like, oh, I'm making money on these puts. You could be long calls on the same thing, and at a certain point in the day you're probably going to be making money on the calls. So we'll see. Maybe tomorrow just goes, off to the races. But just for prudence, I wanted to add that on. And I can see it looks like the Qs are up in the after hours trading right now. Let's see. Yeah, up about 30 basis points. So we'll have to see. This could be the beginning of a real ripper in the Qs. So I want to be, just cognizant of that. Yeah, those were my trades for the day. Then let's take a look at some options order flow. It's definitely a good feeling when some of these positions start coming together. Like Micron is another one that we have on the books. I like this semi space right now. I think this one looks really solid. I have the 95 strike call calendar spread. So I'm long, I believe, the May 95 strike call. It's either May or June, and then I'm short the March against it. So this one looks really good. Applied Materials also looks very good as well. I might take this one tomorrow. We'll see what happens. Because the semiconductor space, it's actually going to benefit from the economic reopening. I really think that due to factor exposures and, given that it technically falls in that technology basket, I think it's one of those like baby thrown out with the bathwater scenarios where, semis are actually going to do well with this reopening on a rate of change basis, but they got sold off as well. So I'll be looking at AMAT tomorrow. Let's take a quick look at this options order flow. I'll let you guys go for the night. So we had in the morning, these names that we always see pretty much every day, like some Tesla activity. Now everybody's been buying the puts in ARK. So we'll see if ARK just continues to rip. Tomorrow, some Q's hedges going up. I thought this was kind of interesting. This was the EWU order that actually prompted me to enter a position here. I rarely see this one come up. We have some orders for the cruisers. This is a really short-term order, March 19th. This one is for April 16th. If we take a look, Norwegian doesn't really look that strong here. It looks okay, but I think the one that really looks strong is Carnival. Look at this, just looks a little bit more constructive. So I'll be watching Carnival tomorrow as well. Let's see Royal Caribbean. Yeah, Royal Caribbean looks pretty similar to Norwegian. I don't know, let's see what else we had. We had some Palantir orders. Let me see what Palantir's doing. I know everyone on Twitter has been like, Palantir, Palantir, Palantir. Yeah, and this one's doing nothing. So yeah, that's the thing. Like, a lot of people, Palantir had IPO'd for like $10. And this thing like doubled and tripled and actually quadrupled over the course of like 6 months. So people just get in their minds like, Palantir is a good stock. It's a good company. Like, it should keep going up ad infinitum. But yeah, with these companies, like when the stock quadruples, everybody knows it's a good company. It literally quadrupled. So yeah, a lot of people get sucked into these, and it's like buy calls, buy calls, buy calls, buy calls, buy calls, buy calls, like the whole way around. And in the grand scheme, this thing is just consolidating. It's really been in a range for the past couple months. We'll see what happens with Palantir. It's not really one I'm super excited about. And then we had some hedges going up at the end of the day. So we had some Q's hedges, some Facebook, AMD. Let's see how that one looks. We'll wrap up for tonight. Yeah, AMD not looking so good on a relative basis compared to some of these other semis. So we'll have to see. But yeah, there's players coming in for AMD as well. But that about does it for this market recap video. Hope you all had a great trading day, and I'll see you all tomorrow.